GPIQ, the monthly ETF, the Powerhouse Income Fund. Is this what you want for retirement? Well, we're going to show you everything about the fund, and we're also going to show you, we're going to take a deep dive test into dripping and not dripping of the fund for people who are either A, just getting close to retirement, long-term out for retirement, or deep into retirement. We're going to give you all that information today. I'm Doug, the retirement guy, with all your monthly ETFs across the board. So GPIQ from Goldman Sachs has been a very popular fund. It works off the NASDAQ 100. And a lot of people talk about this, that this is the fund you want to have in your retirement fund. So let's break it down, give you the back test. How is it done over the past 24 months? Past performance does not guarantee future results. The information provided in this video is for educational information only. I am not a financial advisor. Always talk to a professional advisor before making financial decisions. Now, GPIQ, this is the full back test that we do. Beyond just yield chasing, what happens to your money over long periods of time? So we use a calculator to do this. We use $500,000 as our starting capital. What we have found over the performance validated across 24 months, so January 24 all the way up to February 26th, what we found with this fund is that with $500,000 as your starting capital, your total return would have gave you a 71% growth of $900,000 of value of the fund. Now, this is when we talk total return. This is basically taking all of your dividends and growth of the fund and just keep piling it into it across the board. So what happens here on this fund, you can just see that there's a good chunk of growth and there's a good chunk of income. So this is why this is a one really fits well with a lot of different retirement packages of pre-retirement, after retirement, on all the way through. So now let's check under the hood. The Goldman Sachs NASDAQ 100 Premium Income ETF, GPIQ, you can see has assets about $3.08 billion. Now this fund came out November 24th of 2023, okay? And we really put this together from January so we could get a real 24 months into this. They have over 60 million shares outstanding. And over the past 12 months, they've had a 10.41% dividend yield, paying out $5.29 in total dividends. Now, they do pay out monthly onto this fund. So when you take a look at the maximum potential, the total from October 24, 23, all the way out to today, you can see that they've had a 31.33% price increase. And that is over some period of time, like we had the April 2nd tariff, as they call it, Liberation Day. We've had some mixtures throughout that period of time. So it's held well. Here's the next thing we look at, the performance of the total return. Since inception, it's averaging 24.08% each year. 1 year average, 23.57. Now we take a look at the year to date. Year to date really is about 2.5 months as we sit right now, down only 1.41%. And over the past month, it's down 0.32%. Now, of course, a lot of people will tell you that's part of all the stuff going on geopolitically or politically with Venezuela and Cuba and Iran and everything tied together. This thing's still holding. The NASDAQ is still holding its own across the board. So the setup, starting the clock right here, tracking the GPIQ, the performance from inception through the market cycles. So the start date that we used was January 1 of 2024. So the starting price was $43.24. Our starting capital was $500,000, which was able to buy us an initial shares of about 12,142. So this is what we're starting with. And all we're doing is if we put that $500,000 into this fund at the start, these are the numbers that we originally attained. Now we take a look at the price performance. Okay. So we're down here about that $43 price point. And even through Liberation Day, It recovered fairly well. It's had its ups, its downs, but overall, over the past, basically from about July all the way until now, we've had a very steady growth across the board. Our ending price of $59.38, that's a total return of over 37.2%. So not bad. And this thing really has that 37% the capital growth across the board. Now, when we take a look at the monthly payouts of the fund, and when you're in retirement, this is probably the biggest important thing that you're looking for is you're looking for income. So we don't yield chase here on the channel. We always look at total returns, but this is breaking it down to where you can see that the monthly payout, it started off about 37 cents per share per month. And currently it's about 46 cents. So that gives you an average about 42 cents per share per month across the board. That's got a trending up value of about 24%. Okay, so not only did you have some growth into this, you've actually had some dividend growth along with it. So over the past 24 months, we would have collected a total of $132,000. So let's divide that in half, and basically we're looking at about a $66,000 per year of income off of $500,000. Not bad. So our growth of 37% analyzed about 18% per year. So the monthly payouts show to be very smooth, fairly steady. Now these things, again, you have to remember, are always subject to change and they're not guaranteed. So I don't want to put anyone out there and just saying, oh, this is a simple put the money in and be done. You still have to babysit. You still have to watch it. But overall, it's so far in 24 months, fairly strong performer. Now, the question I get all the time after you collect your dividends, where do you put your emergency fund or your idle cash? Where do you live off of where the money is at? Well, I always go right to Bankrite. It compares the best savings accounts across the board. So I'm always looking at who has the best possible savings. So you can see here, you can get American Express now as a savings account. Capital One's always strong with 3.2% interest rates. But here's the real unique one, VIO Bank. Never heard of them. Paying out 4.03%. You don't have to have any money into the account. So you're actually picking up even more interest on your money after you've collected those dividends. So I'll give you something special. Click the link or just hit the scan button right here. You can scan it with your phone while you're watching and get all the information for your area. Every area is different. Banks are always trying different things. So this is a great area to take and put your money into to live off of. Now we're going to get into our next test. And this is what ifs. And these are all the what ifs at what goes on. So if you're new and you're developing into retirement, you're maybe 10 years out, 5 years out, you have the scenario A, which is 100% what we call DRIP, which is fully reinvestment strategy. So if you would take every dividend and just click it, and your most brokerage accounts all have this, you click on it and it automatically reinvests all the dividends each and every month. So your total reinvestment would have been $148,000. You would have added almost 3,000 additional shares, 2,990 to be exact. Your total return over those 24 months is 71%. So your portfolio would have went from $500,000 to $870,000 in just over the past 2 years. Now remember, past performance does not guarantee future results. Okay? And these numbers are not just, we're putting it's hypothetical numbers that we've put into $500,000 and moving forward. So this would be what you call the set it, forget it program. Did fairly well. Your income growth would have started at $4,500 and ending about $7,000 per month. Now remember, all that money is being poured right back into it. So that reinvestment rate is 100%. Your monthly income about $2,500 to give you a portfolio value just a hair under $900,000. So not bad across the board. Now we go to scenario B. And this is the one I always say, if that you're maybe 2 years out, maybe a year out from retirement, or you may just started in retirement. Now, the reason why I say this for 1 to 2 years out, this is a great way to start testing your retirement portfolio. Testing, can I live off of dividends? Can I live off of what I'm looking for down the road? So the 50-50 split, which is the sweet spot, it's income today and growth for tomorrow. These are the things that you need to work with. So if you need a little bit of income, but you don't need all of it, you do a 50-50 split. Now, unfortunately, I don't know, and if you do know, please put it down in the comment of a brokerage that has an actual setup that you can do 50-50. Most of them, it's on or off. But if you do know somebody, put in a comment, let me know, because I've been looking and just cannot find any across the board. So here's the performance that you run into. Your performance value, your portfolio, would have grown from $500,000 to $780,000. That's a total return of 66%. You would have received $70,000 over 2 years. So that means $35,000 per year that you would have had for income, and $35,000 being spent into reinvesting over those 2 years. You would have added 1,495 shares from that dripping strategy. So when you take a look at the chart, your monthly income growth, you would have seen you would have started off about that $4,400. You'd get all the way up to $5,600 because of the additional shares that you've bought. The 50-50 split, so you're getting basically, you got to remember, this is over 2 years, $70,000 of cash income, or about $35,000 per year, $35,000 being reinvested. So you have money that you can spend, but it also is growing your portfolio. This is why I would love to find somebody who does the 50 split, because there's not always that I need as much money, but I'd like to continue to develop and grow each and every fund equally. Now our scenario C, this is the one when you're into full retirement, like myself, been into it for over 10 years. You're going to a zero reinvestment, and because your income, everything is about income. You want to take 100% of the money, and you just want to go live life and enjoy life and do what you want to do. So here's where it is. Your income comparison, starting monthly income in January 2024 would have been $4,500. Your ending income would have ended up right around $5,600 with about a 24% increase because of the increase in the distributions. Cash received over those 2 years, $132,000. Your portfolio would have grown by $200,000. So your total income, $132,000, your total gain of $200,000, that's a 62.5% total return over the past 24 months. So remember, these numbers can change. These numbers are all hypothetical, and you could, over 24 months, this is a fund with $500,000 into it, easily show the numbers that we have on the board. These are from the past, so you don't have to worry about that one. So you just slowly have a slow, natural growth, but you also have a full income from distributions. So overall, let's take a look at GPIQ. How does it work? Well, what you're running into here is 100% drip gives you a 71% total return, $900,000 portfolio from a $500,000 start, $7,000 a monthly income. This is why I say starting early helps out tremendously. Starting out 2 years before retirement, 4 years before retirement, this is huge. Drip, drip, drip. 50-50 split when you first start, 66, so about a 5% loss in that difference. So getting you about $805,000 portfolio value, income about $5,600. A zero drip program, 62.5% total return, great numbers over those 2 years, $745 total portfolio value with about a $5,600 a month income. So the key insights, all the scenarios showed some strong positive returns. So Dripping or not dripping, you have a positive on both sides. The drip strategy maximizes your growth, as you can see. You're getting about a 3.5 percentage points by doing 50-50, and about 8.5% if you're doing a whole 100% drip. But the income flexibility is the different of your needs. What do you really need and where are you at? Like I said, if you're in retirement, you want full deal, this fund definitely fits well in retirement packages because it gives you income with equal amounts of growth. Guys, let me know what you think of this fund. Let me know. Maybe you hold it. Love to hear a comment down below. Maybe you're thinking about it. It's another one of these funds that fit very, very well, like I said, in retirement packages. Let me know your comments below. And best of all, hit that like button if you like what we're doing for you.
Thank you for watching. Press the like button, hit the subscribe button, and join. Leave any comments below and join